Hello there. What's up? This is Noble. Welcome to Insider Trading. I'm gonna give you guys a second, give you a chance to join. Hop on. I said I was gonna start at 8. It's 8:05. I'm rocking something different today. This is such a great mic. I got on my IU apparel. IU is Indiana University. For those that don't know, how do you not know? I went back up to Bloomington, Indiana. Had a guy's fishing trip. Some good man time in bonding. Talking about life and love and money and marriages and everything. And we caught some fish. I wish I had some pictures to pop up. A lot of good fish. It was a stocked lake though, so it's kind of cheating, but whatever. That's the whole point. So, I know a lot of you guys are worried about the markets. You're worried about the recession, potential recession, very likely recession. We're going to talk about all of that. For those who are in Insider Trading, which is actually a group on Facebook that my cousin Joel Harrison, shout out to Joel, and myself started like 10 years ago. It's roughly like, 30,000 people in the room, an amazing community of people who just want to learn about trading and investing, who are learning, millionaires, multimillionaires, thousandaires, hundredaires, and some folks who ain't even there yet. So you're welcome. Bring your friends, invite your friends in, join the page. Go to Facebook, type in Insider Trading. You'll see some gold bars. And join us. Me and Joel, man, we've been educating, doing, our thing for a minute. This ain't new for me. I started educating, trading first, and was successful there first. Then I taught kids for about a year and a half for free in an after-school program, just to see if I could really break the concepts down. And then I knew I could teach. I could help. So all I want to do is help you make more money, help you understand this market better, help you make more sound decisions, not emotional decisions, sound decisions. All right. So what we're gonna do today is we're gonna go back. We're gonna go back in time. A lot of y'all don't take advantage of historical chart patterns, and you're in your if we start talking about technical analysis is pulling up a chart, which let me pop one up real quick. This is the technical side, right? It's being able to pull up a chart and read price action. What is that? It's literally the prices of things using special mathematical tools and indicators based on simple math to complex math to statistics. Indicators that help you to basically just say, where do I get in? Where do I get out? Is this asset, whether it's crypto, foreign exchange, futures, stock options, futures options. Y'all don't even know about futures options. All the markets, it's just prices. As soon as you get into this world to say, I want to be not only a good investor, but a good trader, you got to spend some time. You got to learn the technical side. You have to. There's no way around it. It's great that Apple's a good company fundamentally, but what price should you buy? Should you not buy? And right now, is the trend down? Is it changing? Are we getting a bounce this week? Like, where are we? Right? You need to see prices. When I think of Apple, I think of the store. I think of Steve Jobs. I think of the products I love. I bought a lot of them over the years. I think of my shares that I own. I think of some trades that I've had that have been really dope on Apple. But I actually picture a chart. Like, as soon as you say Apple, the chart pops up in my head because I know it. So we're gonna go back in time a little bit. We got to go back. Too many people, I think, don't once again take advantage of looking back to see what's happened, because everything that can happen has already happened. We've had a Great Depression. We've had about I forget the exact number. I think like 22 corrections. which is basically like a 20% pullback from the highs. We had like 22, 23 of those. Um, they average, they were averaging every 6 years. Maybe that's changed. That was the last data I saw a few years ago. A recession is defined as 2 quarters where GDP, gross domestic product, everything that we are literally creating and exporting, right? Gross product, everything, put it all together, everything we've made and sold, gross product, gross, not the net, the gross. 2 bad quarters, 2 declining quarters of GDP is what's considered a recession. So we're not in an official recession yet, but we may be very soon. So what I want to do today, I want to do what I've seen nobody do. Because I pay attention, there's other, podcasts. Some are video, visual, some are just audio. There's tons of people in the market now, tons of experts and gurus. Cool. Listen to whoever helps you. All right. But what I haven't seen anybody do is go back far enough to really make the case for why this is really simple. And when I say this is really simple, what I mean is I want to show you today the worst that can happen based on the worst that's happened. Like picture perfect clockwork. The worst that can happen. Today, I'm going to show you exactly where the market can go. I want you to have because think about this. As an investor, your job is to stay disciplined. You know how many people from the recession of 08, after the recession, got so beat up by the recession that they said, man, this stock market thing doesn't work for me. Nah, I'm going to put my money somewhere else. And then after the recession, let me show you. So I'm on the month chart. I'm looking at the S&P. I want to show you this. This right here. Actually, I'm gonna put a box around the recession. This was the recession. About 19 bad months. Ooh, it was bad. 19, not 3, 4, 5, 6. 19. All right. I think that's the official number. If not, either way, I could just count it right here. But after that really bad recession, thousands of jobs. Companies had to restructure. Banks were y'all remember the recession. I don't know where you were in 08. I had just started making 6 figures for the first time in my life working at Bank of America, and we go into a recession. All right, so this is where I got my start as a trader, serious investor, and I had money, making 6 figures for the first time. I had corporate housing, so I really didn't have any bills for like the first 8 months. I really didn't have too many responsibilities, which was picture perfect for me. It was God given. That's why I'm here now. It's part of my purpose. Everything that I've seen and been through. It's been an amazing journey. Some pain, some joys, a lot of joy, And yeah. So we had a really bad recession. And then we had virtually 12 amazing years. 12 amazing years. 12. I'm gonna say that again. We had a recession. Actually, I'll zoom in just a little bit here. I want to show you where this was. And I also want to show you how far we dropped. Give you some percentages. Turn my second camera. I like the second camera. Ooh, that's clean. That's clean. Wait, hold on a second. Wait a minute. Hold on. Just 1 second. I got to stop and give a shout out to my barber for giving me this super razor amazing line. And my father was a barber, rest his soul. Noble Woods Jr. I'm the third. I'm a black man. Y'all know how we are about our haircuts. I'm feeling good just because I got my haircut. I'm be real with y'all. I got my haircut. I got to go live today. I got to do something. I got to, And plus, I've been bouncing around. I've been all around the country last like 5, 6 weeks. I've been living out a suitcase. So just having fun, traveling, seeing my family, seeing the people that matter to me, And somebody said Ginsu Sharp. Yeah. Ginsu Sharp. So I'm as a son of a barber, I got to think about haircuts, man. I just had to real quick. Brian Appleberry. Shout out to my barber, man. Look him up if you're in Atlanta. Jason Yancey. I know you still working on your movies, but shout out to him too. That's my guy. Jason don't even cut anymore. I don't think. Got into the movies. Anyway, okay, I just had to do that real quick. Good credit where it's due. When I feel good and look good, that helps. So yeah, I got to give some credit to my barber. I do. Okay, so check this out. I'm actually gonna get rid of this box real quick. This is S&P, SPY. It's called the Spiders. S&P 500 Standards and Poor's. The way I teach it to my kids, if you don't know what an index fund is, you don't know what an ETF is, what is an exchange traded fund, all these terms and stuff. The S&P is the all-star team. That's all it is. There's roughly, 10, 11,000 stocks across the world. Here domestically, if you had to assemble the best 500 companies, you basically have the S&P. That's what the S&P is. That's literally what it is. It's 500 of the biggest, best companies. Why do I say that? I teach it that way to my kids because every child knows and loves some sport, boys and girls. It's easy, simple metaphor. So here's the problem. If you're in companies right now, long-term portfolio that are not in the S&P, think about that. You're betting on players that ain't even good enough to be in the all-star team. I don't know if that's a good strategy. I don't know. I'm not saying it's bad. I'm not saying dump everything because it's not in the S&P. But what I am saying is think about it. This is very simple logic. The S&P is the benchmark. So these 500, they legitimately are. You could argue these are the 500 best domestically. So if the companies that you're thinking about, worrying about, loving, whatever, wherever you are not in the S&P, or they're not in the Dow, or they're not in NASDAQ, which are our three big main indexes that we talk about every single day. From now until the rest, until there's no people left, until the robots take over, and the Matrix and all that stuff comes, which probably is, because we doing a lot of stuff with this technology. Every time they make some new bots, they invent some new language and start doing their own thing. Man, it's crazy. You gotta love technology, though. Gotta love technology. I'm a sci-fi guy. But robots probably are gonna kill us. They probably are. They probably are. Speaking of robots, over the last 20 years, let me give you some fun facts real quick. Last 22 years, best sector of the economy. I'll take that back. Not of the economy, of the stock market. There's 13. Right? Best sector, tech sector. Why? Because we love tech. Everything has to almost become a tech company now. We got fintech, financial companies with a tech focus, right? The tech is what allows them to do something very unique to solve problems based on finances, right? Your I can't even think. Your PayPal's, my mind just went blank. PayPal and all their competitors. There you go. So, once again, recession right here. Highs before, let me zoom out just a little bit. This was October of 2007. We hit a high 160. We went all the way down. March, that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 months before we found the bottom. I don't want to say that to scare you, but today I do. I want us to be mature. I want us to be realistic. I want you to know what's the worst case scenario, which is a full-fledged, the type of recession that we had the last time and the time before that. Most people only talk about the 08 recession. Like that was the only recession. You can compare it to the one right before that. The exact same thing happened. All right, so we're going to do that today. I'm going to show you the 5 key technical indicators to know. We're only at step 2 right now. So y'all can breathe. We only at step 2. We get to 3, 4, and then 5. We get to 4. It's like, yeah. Hopefully that side hustle you working on right now is gonna keep you afloat. You're not gonna lose your shirt. And that's really the best time to buy. That's the crazy part. The worst The worst part of the economy, I keep saying of the economy. The worst part of the recession is that step 4 or 5 dip, and I'm gonna show it to you. I'm gonna show it to you in a second. That's actually where the best deals are. We're not there yet. I'm not saying we're going to get there. I don't know. I can't tell the future. All I can do is read the charts. I try to be sound, logical, um, and really emotionless in my analysis. I don't hope per se for anything specific. I just read the charts, you know. And I've studied these. I've studied these charts for a good, geez, 20,000 hours now. Teaching kids, adults, advanced stuff, futures, foreign exchange, options. You know, it's all the same in my head. So, my guy James Williams. What's up, James? He said spiders. Yeah, man. And make sure y'all can see the IU logo. But the thing is on the other side. Somebody said, man, them DEFCON levels. Yeah. Yeah. Hope we don't get there. Okay, so let me see. What did I do? We defined recession: 2 falling quarters of GDP, 2 declining quarters of GDP. Right? We already had one. We got some numbers coming out soon, but I Google that for you for fun. Google and find out when will we know? When will we officially know? It's coming really soon. I think you should know. Google it. I ain't here to tell y'all everything. Some stuff you just got to Google. Plus, it only takes you like 10 seconds anyway, maybe 30. Folks from Insider Trading have given me some stocks. So if you're watching me live, feel free to type in 2 stocks. Nobody does this. Nobody does this. Live analysis on the fly, technical perspective. And I don't use every single tool and do a deep dive, but I do give you legitimately exactly what I see, what I would do, what I would be thinking. Right. And some nights it's 30, 40 stocks. Today, a little bit lighter because I haven't done any live pods in a while. So I think my community, my folks didn't, they weren't, I haven't been doing them at a very consistent every Tuesday, Wednesday, Monday, whatever. So, it's summertime. Gotta enjoy the summer a little bit. Okay, so we've defined recession. We know that the last recession of '08, from the high to the low, where we actually found a bottom, 18 months. Gives you some perspective. 18 months. Let's do this. Let's go back here. Let's go back to this. I want to go back to 95 real quick. And don't worry, we're gonna jump to where we are now. I want to analyze these 2 major declines that you see: the recession of '08 and basically the dot-com bubble bursting, which was a ton of tech internet-based companies. The internet was new. We had this company talking about how they're gonna sell books online. We're like, what the hell is this? Amazon. Well, Amazon rainforest. What does that mean? They said they were gonna sell books. And then they started selling everything online and changed the world. But everybody didn't believe per se in Amazon. And actually, let me go back a little bit further. Jeez, look at this run from 95 to 2001. You had 6 years of nothing but straight growth, bullish market, easy money. A lot of money's made in those very strong bullish markets. After the recession, we had 12 years of easy. But did the recession beat you up so bad that you lost focus as an investor? Now, I don't know where you at money-wise. Hundredaire, thousandaire, millionaire, multimillionaire. If you're a billionaire watching this and you're getting some value, please reach out. I want to help you personally. I want to help you personally, free of charge. But you got to know these cycles. And I had a guy, my barber from Indy, Mike, shout out to Mike. Yeah, came down to Atlanta for a second. And he went back. We were having a good conversation. We were talking about, the market. Right? Here's what he said to me. He said, we were talking about investing. I said, man, you got to do it. You got to start now. Got to start now. I was breaking it down. I was trying to get, I'm in the chair. I'm rattling off the stats. I'm trying to put it in his language as a man, but as a barber, as a father, I'm trying to find that metaphor that works for you, right? That's good teaching. That like, you got to make it relate to the person, make it personal first, connect to emotion. Got to provide for your son. You got a businessman. You should be buying businesses. I'm amazed when I meet business owners who don't get that investing is just buying businesses. Why are you running a business trying to make it something strong? Wouldn't you love somebody to want to buy your business? Wouldn't you love for somebody to come into your shop, your store, online? I don't care what you sell. It could be weave. It could be whatever. Wouldn't you love for somebody to say, I love how you're running your business, your customer service, your branding? Um, I think operation. Well, they won't know your operations, but they could tell a little bit. I want to have a conversation with you. I want to look at your finances. I want to buy. I want to buy. I want to buy your business. Or I want to buy stake in your business. Now, depending on where you at, I think like 40% of all business owners are like solo entrepreneurs like myself. So there's no team. There's no you call me, you get me. Right? I'm every person in my business, which I'm actually working on changing. Team. Team, team, team. But I'm amazed when business owners who I think a lot of business owners are hoping that they run a business so successfully, so well that somebody with a lot more money just wants to acquire you and pay for all your hard work and write you a huge check and even let you stay on the board or be a consultant and get a little nice cushy day. Right. So a lot of us go into business because we have skill sets, passion. We want to solve a problem. We want to help people at the core. Or maybe you're just super capitalistic. You just want to make money, but either way. But you want somebody to buy your business, or at least want to buy your business. That's all this investing thing. You can actually buy Apple. I'm gonna just talk about Apple today. I've been talking why? Because I've been talking about Apple since 08, 06, really. But I really got serious about investing in 08. So I could teach you everything you need to learn just from Apple's chart. So I was talking to Mike. We were talking about investing. He said, man, so I could do this, so I could put X amount of money. I said, yes, you can put whatever amount that's comfortable for you. Right? It's not about the amount. You need to start. I don't care what you hear. I don't care how bad. We can talk about what to buy and expectation. But the longer you wait to start, the less time you have. This works. Compound interest needs time to work. The math doesn't go that far. Like the returns don't get that high if we talking about 2 years of compound interest. We start talking 20, 30 years. Oh, that's how money grows. And many of you guys watching me right now missed that 12-year easy bullish run because the recession scared you so damn bad. You just was like, man, I don't know nothing about investing. Right? Like you just, unfortunately, 12 years. 12 years, which is a long time. Bullish market. Bullish market. So to jump to the chase, I was talking to Mike. I said, yes, you need to start investing. He said, well, when can I take it out? Well, if I make, let's say I'm up, I don't know, 20 stacks, 20 racks, I've made 20,000 because of what I put in. I've made an extra 20. Can I take it out whenever I want to? I said, well, yeah, you can take it out whenever you want to as an investor. Yeah, you can take it out. But what you probably just did, that 20 you took out, you actually just took 80 out of your future. Because investing is about time. Right? So I meet so many people who, as soon as we start talking about making money, they're ready to take it out. You ain't even made nothing yet. Time, guys. Time, which is why today I'm going back and we're gonna slow this down. I want this today to be cathartic psychologically for you. I don't care where you are, I don't know who you are, but I want to go back literally to 1995 and show you these two major drops. The recession of 08, the dot-com bubble bursting, they have the exact same pattern. Real quick, I'm gonna cover the 12 years and then I'm gonna show you exactly where we are now in this same 5 steps. There's 5 things that I've noticed that happen from a technical perspective. You can't even argue with me. It's numbers and colors on charts doing math. It's not Noble's opinion. It's literally just math. I could teach, maybe not fifth graders, ninth graders this stuff. We just don't teach ninth graders this stuff, unfortunately. So we don't know it when we 25, 35, 45. But I'm gonna show you today. So let's dive in. Oh, let me check the comments real quick. Rochelle said McDonald's and Neo. Cool. Somebody said PLTR. What the heck is PLTR? I forgot. It'll pop up. And Roku. Bevy, hey. I didn't forget about you. I didn't forget. I got you. Don't worry. I didn't forget. She said, would you analyze SPX? Sure. And then we got NVIDIA and Google. So I'm gonna add those to my other list. Okay. But let me start here. And let me hit you with these. And go through this. And let me say this, guys, too. There's a like I see somebody, Charles Holland, what's up, my guy? He LRCX and AMD. Nah, Charles, you threw me off. Well, you didn't throw me off. I threw me off. Yeah, anyway. Okay, one last thing. Y'all know me. I love hats, but I got such a nice line, and I was like, no, I ain't gonna mess it up with a hat today, but I gotta put a hat on. So I've been wearing this one. Can y'all see that? I've been wearing this one. And people are like, what does that mean? Why is the bull upside down? It's just my little fun way of knowing if you're an investor or not. If you see a bull that's upside down, come on, you know what I'm saying. The market's down. Bulls are down. Bulls are getting beat up. All right, that's all I'm saying. But I'm gonna throw this one on today because it's fully red. This is it's just red. The market's red. Now it's not bleeding bloody panic. It's not panic yet. Once again, I'm gonna show you the 5 sequential things that happen when we go from uptrend to trying to slowly reverse to downtrend to stronger downtrend to oh my god, it's bad. Those are the 5 levels, but I'm gonna walk you through them. This is one of those you need to save. It'll be on my what do you call it? It'll be on my YouTube channel, so you can watch it later. I want you to watch it again. Don't just watch this one time. Like I'm actually doing like the type of teaching that I charge people for that I normally don't do, like just live for free. And a lot of the stuff that you see live, people like me, they're giving you just basics. I want to actually give you guys a little bit more meat today. Even if it goes just a little bit over your head, but I don't think it will, because I'm gonna try to bring it down once again to 5th grade level. Right? Metaphor. Everything. You can teach everything if you can learn anything. Right. So I'm gonna try to make sure to make this as simple as possible. And we're gonna start with the S&P. This year has been tough. Probably felt like this.
I have wrestled with an alligator. I done tussled with a whale. I done handcuffed lightning, throw thunder in jail.
That's Ali, man. That's Ali. What did he say at the beginning?
I have wrestled with an alligator.
Yeah, you don't want to wrestle with no alligator. Those of you guys who don't have deep experience yet, you've been wrestling with an alligator this year. I put up a statistic that I found from Ariel Schwab, a Black Investor Survey from 2020. That said, oh, what's the number? I just got to hit you with this real quick. For African Americans, most folks watching this are African American Black people in this country. What is that percentage? Basically, folks who are under 40 who started investing during the recession. Oh, it's a really high number. It's a high number. Dang. Somebody inside trade and find that real quick. I posted it. Charles Holland. Go to the page, type in Noble Woods. It should be one of my last posts. It's like a big chart. I just don't want to do it right now, but I want to give y'all that. Somebody find that for me. Okay, anyway, I'm gonna keep going. Okay. All right, so let me blow this up and then let's dive in. So this right here, this right here, this right here, this right here. Actually, before I do that, the indicator that I have on the bottom of my chart is the TTM squeeze, trade the market squeeze. That's what it's called. I won't get super advanced, but for my folks who are a little bit more advanced, the squeeze is powerful. It's one of the best indicators out. I would almost argue it is the best out. I think it's hard to debate that, but we could for fun. But it's actually two indicators and a moving oscillator. If you knew and you like, what the hell did he just say? Don't worry, I'll break it down. It's actually Bollinger Bands and Keltner channels, which is crazy because years ago I realized that both of those two indicators are amazingly powerful, but they're telling you the opposite thing. So I literally would have Bollinger Bands and Keltner channels on my chart, and then years later they literally created the TCM squeeze, which is essentially exactly what I was doing because I understand the math behind this stuff. So I had the squeeze before the squeeze was even created. Right? Because Bollinger Bands help you understand volatility. Keltner channels help you understand volatility. They use it a little bit differently, but the two together, they make making money easier. That's all I can say. My job is to help you figure out how to make more money and not to make bad decisions. All right. Up here on my chart, these are Bollinger Bands, but these are 1.0 standard deviation. For my folks who love stats, dig into the 1.0, the 2.0, the 3.0, like know what those varying levels mean. Put them on your charts, explore. To keep it really simple, every uptrend you'll ever see is above the 1.0 band. Every downtrend is going to be under this white line. Here's another strong uptrend. It's above. Recession, it's below. 12 years of a very, very bullish market most of this time. And really, this was COVID here, March. Right. Then we had about 19 months above very strong uptrend, simply just above this white line. Yeah, that's it. I ain't gonna go no further. That's the lesson there. I could go a lot deeper, but I ain't trying to, go MBA deep on y'all. So here we go. So we had a really strong uptrend. All right. This is when all of these, anything with .com, .net, anything, valuations were higher and higher, higher and higher, higher. And I just kept going. Right. Market was going crazy. 5 years. I didn't say 5 months or 5 weeks, 5 years. 5 years. All right. And let me do this. Let me take these lines off for a second. I'm going to explain what these are and just real quick show you the sequence. And then I'm going to hop to your charts. So this won't be long. Okay. So this first bar where I have this one, it's not on my chart, but there's a moving average. It's an 8-period moving average. I probably should have put it on my chart, but just trust me. It's a little line there. This is the first time out of all of these candles in here, right, where price closed under that line. All right. So you can't see it, but don't worry. That one little line, because you're not going to digest all of this anyway, but I do want to give you some meat. I'm going to give you a lot to process. I do. Just closing under that 8-period exponential moving average, that one little line. What it does, it's the signal that the uptrend has slowed. And it's basically the signal that we're starting to reverse. Doesn't mean that we're going to turn into a full recession. Doesn't mean the trend is going to be down. But that's where price always kind of tests. Even when we kind of pull back, we've made a lot of good money. We'll pull back to the 8 and then we'll kind of go back up. We might go under it for 1 month and then we'll pop right back up, right? So that is like sign number one, very simple, basic, that the strong uptrend that we had is potentially not only ending, but it might be about to go into a downtrend. All of this stuff, y'all, it's the same thing every time. It doesn't matter whether it's foreign exchange, futures, it doesn't matter. It's all the same. Every uptrend turns into a downtrend the same way. It's math. The math doesn't change. Like, it really doesn't. The charts, yeah, they don't look exactly the same, but if you know what to look for, they're doing the same thing every time. day trading, swing trading, long-term investing, month charts, year charts, 5 minute, it doesn't matter. Every chart is the same chart if you understand at a more advanced level what you're looking at and how this data, how these prices work. Right? Let's see. Oh, there we go. Charles Holland, thanks for that, bro. He said Ariel Schwab 2020 Black Investor Survey showed that 30% of Black folks under 40 just started investing during COVID. Think about that. 30% of Black folks. I live in Atlanta. It's a lot of us here. Everybody tries to act like they doing so well. Many are. Some are just fronting. Only three out of 10 who are under 40 just started investing because of COVID. And right now, I know a lot of those people who just started 18 months ago, depending on when you started, 3 months ago, 6 months ago, right at the beginning of COVID, you might be getting frazzled right now because you were experiencing a great 19 months of bullish activity. And oh my goodness, what the heck happened? So I know a lot of portfolios are down. Everybody's is. When the whole market comes down, at least it's not personal to you unless you're in bad stocks, which probably are not stocks in the S&P, NASDAQ, and the Dow, because those are the all-star teams. Best players in the league are in the all-star teams. Wink, wink, right? So my goal is to make sure that that 30% does not get so beat up that you lose faith that this market, that this investing thing works. It does, which is why I'm going back in time. I got to go back and show you this. This is gonna work out. Don't let this be where you got excited during COVID. Oh, and then we went into a recession. Your everybody's account was down. You're losing. You can't figure out how to make money. When the whole market is down, there's only certain ways to make money when everything's down. You got to put your money in really safe things and bonds, things like a Dollar Tree that tend to go up when the market is down. You gotta understand more advanced stuff. You gotta know how to buy puts. You gotta know how to trade options, how to hedge. There are ways to make a killing when we have recessions, but that's the more advanced stuff that you got to get to. We got to get the basics down first, right? So appreciate that, bro. Thanks for grabbing that stat for me. Christopher John said, "Hey, Noble L Woods, a little bit late, but I made it. Thanks for joining, brother. Glad you are here. Glad you're here. That hand clap is just for you, just for making it. Glad you're here. Okay. So let me come back to the charts. Matter of fact, let me add that 8-period moving average real quick. I might as well, because I'm talking about it. I'm not gonna not show you guys something that I'm talking about. Okay, here we go. See this little blue line? Little blue line. Right, little blue line. Right, look at this. This whole uptrend, look at that. We touched it here, did not go under it. Nope, nope, nope. Bounced off it, bounced off it. Right here, oh, went under it. Potential reversal. Oh, came right back above it. Cool. Back into the strong uptrend. All right. So this fundamentally, if we just went candle by candle, month after month, month after month, none of these candles during this entire bullish run, all of these years, the signal that you should have paid attention to if you knew, which you know now, was we closed under the 8-period moving average. What happened second in this sequence? First thing is that the uptrend ends. Every uptrend will end. A recession ain't nothing. I mean, think about it. Like from a technical perspective, a recession is literally just a downtrend on month charts. All right, that's all it really is. Like, forget all the inflation, all this macroeconomic, all the, I don't know how much you know. I don't want to get too deep. If we keep it really simple, if we looked at a month chart, every major downtrend is a recession. That's all it is. So to be able to really be dangerous in this market, fundamentally on every chart, you need to know when and why things change from uptrend to reversing to downtrend. That's it. The trend is your friend. People say this all the time. It's a little nice, funny, cool little mantra. No, that's how you make money. That's how you build wealth. That's how the best traders make money. All right. So I'm giving you that. I'm giving y'all that today. 5 simple little steps to see these big macroeconomics. They take time. You don't have to be super fast. We're not talking about day trading. I'm not even talking about swing trading. You got months to like, and once again, the first sign, close under the 8. That was sign number 1. What's sign number two? Sign number two is when price on the month chart closes under this Bollinger Band, which was right here. All right, this was sign number two. Uh-oh. So sign number one is like, yeah, this uptrend, all of this buying, okay, it's slowing down. And we might continue. This might just be a strong pullback. Might just be a little 20% drop, a little correction, a little sale. Might just be a little sale. Buy the dip. People always talking about buy the dip. Yeah, there's a right time to buy the dip. And there's a wrong time to buy the dip. Right? Sometimes you buying the rip, it's ripping down. It ain't coming back up. You just buying because you just know this nice little simple principle that you heard with no context or depth under it to how to apply it. All right. So yeah, buy the dip works until it doesn't work. And it only doesn't work when we turn into a downtrend because then the down continues. So you have to know this is so critical. This is like 101 and 501 level stuff all at the same time. All right. So number two, we closed under this Bollinger Band, which simply means that price now is like abnormally, like we're, let me see, metaphor, human body. This is like, point one is like you coughing. You've been feeling real good. You've been pretty healthy, but you like, man, I'm coughing. Why am I coughing? Something's happening. Yeah, your health is changing. All right. Number two is where essentially where price starts to go underneath its average. And when anything goes under the average, your grades go below the average. Basketball player, they start to their points per game goes below their average. Something's wrong. It's just math. Something's wrong. Your temperature goes under your average. You're sick. Something in your body is not working. All right, so it's all the same to me. Then this is what happens. I got a little number here at 3. Why? Because this candle was green. So what happens is okay, you get a cough and you're like, man, I got a little fever, right? And because you don't want to admit that you're getting sick and you don't want to be sick and we don't want markets to drop and we don't want players to like start to suck after being really great players, for years. You have that one good day, one good month where you feel a little bit better. You're like, you know what? Okay, yeah, I think I'm okay. I haven't been coughing a lot today. You start psyching yourself out, right? This is when bulls start to buy because all they know is to keep buying. Buy the dip, keep buying the dip, keep buying the dip. And people do because most investors are not educated investors. Most investors are ignorant investors. Respectfully, most have not taken 10, 20, 30 out credit hours of anything because we don't have credit hours of this stuff in college or in high school. Right. So the masses are very ignorant. Very, very. So once again, level one or point number one, first thing happens, you get a cough. Price closes under the 8-period moving average. Doesn't mean anything is bad. Doesn't mean you're sick. Doesn't mean the market's in a recession. It just means that uptrend is probably potentially over. It might not be. Something to look for. Happens every time. Number two, price goes under that Bollinger Band. And it's saying something underneath is starting to be bad. We're coughing. We're under our average. 3 always tends to happen. Always tends. That's a contradiction. I'm gonna say it again though. It always tends to happen where what effectively is happening in this terms of the psychology. We had a dip. A lot of people bought the dip. We're trying to push the market back up. Oh, we're trying to push it back up. If we can't and we make a new low, which is why I gotta right here on bar number 4, when we made this new low, we pushed up 1 month and then we came down again. Oh, that's not what you want to see. This is now you have the fever again, you're coughing, and you feel like you're about to throw up. It's pretty bad. It's getting worse. And very last step, I'm gonna keep this one real simple. If you look at this indicator down here at the bottom, you see how these bars turn red? So that's important. But what you'll notice is on this one in July, you had a green dot. In July of 2001, when this candle closed, you had a green dot. And that green dot says, not only do we have the type of volatility to drop hard and fast, and it's about to get worse. It's you have so much probability of the market continuing to go down at this point that it's actually easy money if you know how to make money when things go down. Most people don't. So that's the number 5. That's when we're full out sick. You're throwing up, you coughing, you got a fever, you know, that's it. Nothing you could do. Time. It's just time. Markets have to repair. Same way the body does. Hopefully this little metaphor of sickness has been helping. So let me do this. Let me give you some numbers with each of these, right? So this was the recession. Oh, I'm sorry. This was the dot-com bubble bursting, right? So how many months was that real quick? Let's see. And I'm almost done. So I'm gonna make sure I get to your stocks. Don't worry. This high was March, and this low, I'll put it on this one. This lowest low was wait, I can't see it. This low, that was wait, hold on. I still can't see it. Oh, that was 29 bars. So that was 29 months from the high to the low. 29 months. That's almost 2.5 years as we slowly went from right buy. Oh my God, amazing. Buy. Market kind of froze, ranged for about a good 6 months. Didn't really go anywhere. Let me put a box over that real quick just so y'all can see it. Right in here, we just ranged. Didn't really go anywhere. But when we closed under that 8, no, got a cough. Closed under this band, got a fever. Had one good day, felt good, but it never continued. My good day didn't continue. I was right the next day back, higher fever. Oh no. I feel like I gotta throw up. Squeeze turns green, this little green dot. Then the biggest part of the drop happens. All right. So let me do this real quick. I'm just give y'all some numbers, some percentages, because this is what matters right now. Right? This really is what matters. If I put a line from this high to just the bottom of trigger 1, when you got the cough, that was only a 9% pullback from the highs. 9%, nothing crazy. All right, we're not in a downtrend. No need to panic. Only 9%. Bottom of trigger 2, when we, started to establish that we potentially really are close to turning into a downtrend if we don't get a lot of buying to turn this around. 16% drop, not a correction. A correction is 20% drop. Got a little push back up here on candle 3. All right. Candle 4, we made a new low. Oh no, 22%. Now we're crossing correction territory. Ooh, is it gonna get worse? And then if we go all the way to this lowest point, right? After 5, after the squeeze gave us that one little green dot and said we have the type of volatility to continue to drop harsh, strong, like we have more volume to the downside than the upside. All right, it's like going to a concert, more people booing than yelling. If everybody's booing, it's a bad concert. This artist is terrible. Something's happening, right? That's what this is, right? When volume goes negative, it's the same metaphor. Everybody's cheering, the volume is up. Oh, we love whatever. You know what I'm saying? That's good volume. That was this period. That was that period with all the good volume. The volume changed. So how far did we drop? We basically dropped 50%. Right? And then, right, so that was 90. So I just walked you through real quick. That was 95 to 2000. And that was the bubble bursting. That's what happens every single time. Every single time. You gotta trust me. Don't take my word for it. My middle name's LeVar. I love LeVar Burton from Reading Rainbow. I know I used to be like, you gotta take my word for it. Butterflies in the sky. Hey, you gotta take my word for it. Read the book. Read the chart. You ain't gotta take my word for it. I know my stuff. I know what I'm talking about. Just trying to help you see it. All right, so then you have this type of drop. We go the other way. We get above the 8. We get above the 1. The squeeze turns bullish. Right now we're cruising, basically just cruising back above the 8. We're trying to go. And then check this out, how amazing this is. This is called support. We went back to the exact same highs. Right? So the high from March of 2000 was the exact same high, basically, from October of 2007. All right. 7 years later, the market has memory. When people say the market has memory, what they mean is that you would be crazy to try to make money long term or think you can be successful at investing or trading, which is harder, requires more intellectual capacity, emotional fortitude, a passion for this in a real way versus just making the money. I mean, yeah, and that's a huge part of it, right? That's the result. That's the outcome that matters. That's the metric. Is your account growing? Yeah. Right. But it's about family. It's about supporting yourself. It's about making sure, right, you're taking advantage. You're cunning. Even biblically, Jesus was like, yo, be cunning. Be as cunning as serpents and doves, as gentle as doves and as cunning as serpents. Be smart. Don't be stupid, y'all. We got all these degrees. We know everything about every social media platform, but I pull up a chart and people are like, oh, I can't learn that. Okay. I tell you what, the people who do learn it make wealth. So you want to be on that side, you've just convicted yourself to a life of not really ever figuring this wealth thing out because you think this is hard and it's not. It just requires time like everything else and great teaching. All right. If you can get a mentor. So let's do this real quick. Real quick. The exact same thing happened during the recession. Exact same thing happened. Exact same steps. All right. Right here. This was number one. This was when we started to get a little sick. This was number two. I'm gonna just put ones. This was number two when we pushed firmly through that Bollinger Band, and we closed under it right here. So we tried to pop back up. Right here was that second one. I probably should make this number two. I'll make it right. I'll actually number them for you. You always get that little bounce where the market tries to go up because people don't want to accept reality. Oh, let's buy. Oh, we tried to push it up for like 2 months. We tried, and then we can't right back down, new lows. Right. That's number four. And what you'll see here, this chart's slightly different, but the green dot with the red bar, this squeeze telling us we have the type of volatility to clean, fall off a cliff. Get ready. The probability of it coming is high. Actually happened here. All right, so I'll put 5 there, which is a little bit weird. But once again, if we go month by month, you would have been like, oh, shoot. And so really 3, when we pushed up for those 2 months and made a new low, we're about to experience some bad. And the market 1, 2, 3, 4, 5, those next like 10 months, that was the worst part of it. So you still could have been in front of all of this down. You still like basic stuff. I mean, it's advanced, but it's basic to me, but it's advanced. Basic is advanced over time. Right. This stuff used to be advanced to me. It's basic now because I've done it, learned it, taught it, all that stuff, made money with it. You know what I'm saying? But it's the same basic process. Market starts to reverse. We start to go into a downtrend. We get that. Usually we get that little pushback up. We have bulls trying to buy, trying to keep the market from being sick. And then something says, hey, is it? Market just throws up. Now, here's the crazy part about the recession. This low. It's going to blow y'all away if you didn't know. This low is it's the exact same low. Well, a little higher. All right, look at that. So this bubble bursting from 2000, 2003. Then we go right back up to those highs. And then we did literally a retest all the way back down to the exact same price floor. This is support. If you knew that, that's really the sale price time to buy. Because that's where it took us about 5 to 6 months to get up higher from there. But right around 80, that's where the bottom was. You had time to see it. Month charts. This is like the slow analysis. All right. So real quick, where are we now? We only at step 2. We reversed under the 8 right here. This month, right now, if the market were to, the month is almost over. We're at point number 2. I gave you the 5 points. All right. We got the cough. Now we got a fever. We got a fever right now. We're not full out sick. So I don't want y'all to panic. Once again, this whole tutorial, lecture, training, right, is designed to help you to understand what's the worst that can happen. Here's the worst that can happen. Even here, when we had this, the recession, how far did we drop? I want y'all to start thinking in percentages, right? That drop from the high to the bottom was 57%. This drop from the dot-com bubble bursting was 50%. So let's average 50%. Just say 50%. Where is 50% now from the highs? Where's a 50% drop from the highs if the worst happens again? Right? 50% is right here. And why is that crazy? Because these last two major lows that we've had, which were COVID in March of 2015. I'm laughing because it's so easy. COVID of 2015, 2020. And then this was back when Japan, December of 2018, Japan was going through some trouble, a lot of stuff. Look it up, Google it. What happened in Japan, Japanese stock market, right? I think Trump, what did he do? He got what's the word? I was about to say repealed. I wish we could repeal him. He got I forget the word. Impeached. Got impeached. A lot going on politically here and in Japan. Market came down. So if the worst that can happen right now, that I see the worst, if we go from cough to fever to the squeeze turns red and we get more volatility because everybody starts to panic. That's why things drop even harder. If we do that 50% drop that I know nobody wants, but I'm just preparing you for because it's possible. All we legitimately would be doing is going back to this level of support around 250. There you go. You're welcome. And I hope we don't do that. I hope we don't do that. Yeah, I know. Yeah, I don't want that to happen either. I don't. Like the trader in me kind of does. It's weird. Like the investor is like the good guy. I want everything to just work out. I want everybody to be thriving. I want everything to work. The trader in me is like, mayhem, panic. Let's get it. Let stuff crash. I'm just gonna make more money faster. Trader me. But investor me cares about y'all. Trader me don't care about nobody. I'm just being real with you. Okay, so let me hit these stocks. Okay. Should I read? Let me hold on. Let me read. Hold on one second. Let me fix this real quick. Oh no, that's the wrong one. That's the wrong one. Hold on, y'all. Give me 1 second. Give me 1 second. Man, this camera is so much sharper than that one. We'll just go to the main camera. All right, give me 1 second. So I can find your stocks. Oh, did I reset that? Oh, I think I did. Yeah, okay. I think that's it. Okay, hold on. Here we go. So let's see. Andre Swanson, NVIDIA and Apple. Oh, let me change that back. I'll go here. Pop up both screens. I'll take that off. Okay. Let's start with Apple. Let's see. I'm gonna keep this simple. I want to go to the week chart. I feel like a lot of folks, until you have the, mastery to really be comfortable, experience to be truly be comfortable. Day charts and anything under that, in terms of how fast those time frames work, they're literally more advanced. You have more fakes. It's just because they're literally shorter time frames. It's more difficult to kind of really nail the trend direction because of the fakes and all the little micro things that happen. Right. So I love going to the week chart, especially because I know most people watching this are, new investors, last, I don't know, 5 years, definitely last 30%, it's 30% chance, probably higher than that if you're under 40 watching this, that you just started investing right in the last couple years. So I go to the month charts because the week chart, because it's just weekly. And what's been happening, this slow move from kind of November, kind of stuck December, market was trying to move. January we dipped a little bit, February we turned into a downtrend, and then March, April, June, going into July, full out downtrend. We're down. We're pushing down. Right? We're under the average. Apple's sick just like everything else. Right? With the entire economy looming of going into, as I covered from step 2 to step 3, where we've not only had a cough and you know, a little fever, but so expect a bounce. We haven't really gotten a strong bounce, right? And I'm telling you now what's going to happen. When that bounce comes, people are going to get excited, which you should on some level. But I don't want you to get so excited that you forget that I told you that those bounces are cyclical. And in the last 2 major drops over the last 20 something years, the exact same thing happened. We had a few months, 2 months, where the market was starting to recover, seemingly. So imagine right now, if the market gave us 2 good months, July and August, you feel great. Don't get excited. Don't get crazy excited. Don't get crazy excited just yet. All right, 2 months is nothing in the 125 years that the market has been doing what it does. That's nothing. That's a day. That's a second. All right, depending on how you look at time. So I'm looking at week charts. Apple right now, it's kind of sitting at some old support. Right there, like 140. We bounced under it. We're just firmly in a downtrend. Y'all probably gonna hear me say the same thing over and over. Because so many stocks look the same. Even if like the chart isn't perfectly the same, the overall analysis is the same. We're down. You know? Um, so to give you, let me give you a little, let me say something without getting, too technical. Last week we had a good week, strong week. But if we're paying attention to Apple, I'm gonna get rid of that for a second too. And I'm gonna put a box here. Think about this. This candle right here. This was the week of 5/16. So we're still stuck in that week to me. We're just ranging. We touched the top of it, could not get any higher. Ooh, that's not a good sign. We touched the bottom, push back up, didn't drop. Okay, that's a good sign. Had one good week last week. If this week closes under this blue box, we're going lower. High probability that we're just going to continue to go lower. All right. How much percentage drop is that right now? On Apple, good old Apple. That's about 30%. Let me do this real quick. Let me see with the S&P how much have we dropped, because I don't know the exact percentage. S&P is down 24. Well, lowest it went was about 20, just say 25%. Apple's beta coefficient, flashy math that just kind of tells you how much a stock fluctuates compared to the market. Way I like to, if I was teaching it to you like I'm teaching a kid, which is kind of how I teach to the 5th grader in you. Apple's beta is like 1.2, which means if the S&P moves at 100 miles an hour as a car, Apple basically can go 120. It's a little bit faster, a little more volatile. But Tesla can do like 210, right? It's twice as right. So the market gets real bad. S&P drops 20%. Oh, the Teslas of the world, because their beta is higher, which means the stock fluctuates more, which means prices move up and down. You can make money and lose it faster because it's more volatility. That's the beta. Make sure you know what beta is. And then if it's under 1, the beta's under 1, real safe, nice little chill company. It ain't gonna make you rich. But when we had these really bad, we go into recessions, people kind of run to those because they're a little safer. And then in times where we have bullish markets, you want to make more, people tend to go harder on the stocks that have, higher betas to make money that way. Right? It's all just math. It's all math. It's all just math. Understanding the core basics of what you're seeing. Right? Oh, so let me go back to Apple. Let me look at Apple real quick on a month. So a lot of stocks, I'll say this one last thing too. A lot of stocks right now are kind of testing. So this was COVID. This month right here was COVID. And then see this candle? All right, see how that candle right there? We were kind of stuck inside of that candle from 1, 2, 3, 4, 5, 6, 7, 8, 9, roughly 10 months. All right, so price has memory. There are people right now who are, I know, buying Apple strong, heavily, very much so, seeing this area, right? And you know, kind of trying to defend this area, if you will. All right. So we might get a little bounce. We'll see. We will see what is going to happen with Apple, but once again, overall market inflation numbers, GDP, new GDP is about to come out. So once again, we're not in. That's why I started with all that I started with at the beginning. We're not. The market itself is not. It's not feeling well, and you feel that. Your account feels that. But it's not time to panic. It's not time to like buy everything you can buy. All right. Worst case scenario hasn't happened. I already showed you what that was. Video. Let me get rid of this real quick. We go to week chart. So Nvidia looks just like Apple to me. All right, looks like back here we had, all right, for a minute we kind of just ranged there. Price has memory, so people are, it's gonna be some support down there. But if we're looking here at the week, all right, got that little bounce right in here. All right, so think about that, right? Like check this out for just one quick second. This is what has been happening on virtually everything. We had the drop, which was like, oh no, I think we're in a downtrend. And then market tried to go up, Nvidia came right back to those lows. Can't go higher. Let's try again. All right. Bulls are buying. We're buying. Let's buy. Let's get it up. Oh, and then the drop was even harder, right? So these moves, right? These waves, it's a ton of different ways you can call them, whatever you want to call them. These pops, right? When they fade, meaning we don't have enough support, we don't have enough buyers, we don't have enough belief, we don't have the fundamentals, whatever the reason is that stocks, right? Because there's a ton of different reasons, right? That stocks come down. And sometimes it's just coming down because everything else is coming down. Right, macroeconomics, y'all like that stuff, right? International business, all that, right? The connectivity between the supply chains of all these and how they function. And if people aren't flying, then there's something else they're not doing, right? Like this stuff is very intricate. It's so connected, right? This affects this. A lot of times people don't even understand what's affecting what, right? When these attempts at buying don't happen, and price can't go higher, we panic, we hit the button, we get out of those trades, which literally pushes stuff lower. All right, so just these downtrends are brutal. Once they start, we're not in like I told y'all, we only at step 2. I pray we don't go to step 5. Because it's gonna hurt a lot of people. It's gonna hurt a lot of people. And a very small minority that's educated, experienced, or just who knows how to connect to the right people are gonna make a killing. Killing. Once you know how this stuff works, both directions, it's both directions. All right. So once again, Nvidia's kind of dancing down here. I mean, I can say the same thing I said about Apple. We're in a range, in a tight range between 190 and 150. We're just not going anywhere yet. All right. We're close to taking out last week's candle. We had a doji at this bottom. That's a sign of confusion. This little small bar, it's not a big bar. So, unfortunately, really good chance that we break 150, we'll push lower. Don't be surprised. I'm literally, like I said, I'm gonna be saying the same thing over and over on a lot of these. Let's see. Somebody said, great breakdown. I appreciate that. I appreciate that. I work hard. Oh yeah, somebody said that's a Michael Burry level short. Yeah. You know what y'all should do for fun? Wait a minute. My brain just died. What's the name of that movie? The Great Short? Is that the name of the movie? No, what's the name of that movie with Michael Burry? What's the name of the movie? Somebody tell me. You need to watch that movie. Y'all need to watch that movie. Y'all need to watch that movie, man. Just watch the movie. It's such a good movie. Golly. He called it. But he called it because he paid attention to the right things. It was math. It was math. Y'all ain't paid attention to the right thing. Somebody said it's going to 120. Oh, I think, the Big Short. What I say? Did I say that? I don't even know. Anyway, Big Short. There we go. Big Short. Charles Holland said it. Somebody else hit me with it too. Okay, cool. Big Short. Yep. Watch The Big Short. Great movie. Great movie. Let me see. Let me check. Hold on. Let me find my other stocks. AMD LRCX. AMD. Christopher John said, I love these lives. I love these lives. I can see things clearly when explained. Yeah. That's the thing, this stuff is complex, man. Like this, like this for me, this is like what? I got serious in 08. It's like year 14. So of course I should know something. Right. I should be able to teach y'all and actually know what the hell I'm talking about. And I'll be real with y'all. You can put me in a room with anybody. I don't care how much they've made. Like the beauty of the market is it doesn't matter. Like all the personal stuff that we like on Maslow's hierarchy needs, that self actualization at the top, what you actualized about yourself as a person, whatever you believe, all that don't matter to me. I could care less. I don't care how much money you made. I don't care about your degrees. I don't care about none of that stuff. If you give me a chart, I know exactly how to be deadly in any room. And you can get there too. It takes time. This stuff is math. It's math. I'm gonna keep saying it. People don't talk about what it is often because a lot of these gurus try to act like they so special. None of us are truly special. We just put in more time than everybody else. That's all. Because this stuff isn't taught early. You didn't get it in college. You probably had a mentor or something. Somebody had to bring you into this world, a team, a mentor, a guru, something. And then you had to get really serious and dive in, right? To get some results and some time and experience and go through that journey of pain and pleasure to get consistent, right? Really working on yourself as a trader, as an investor, right? But all the gurus, and I'm one of them, none of us are really per se special. We just know more. I don't know. Or we are special. Whatever. I'm gonna go the other way. We're amazingly special. You need us. We are critical, especially for Black America. We need more. With some integrity, with the character that needs to kind of match, because it's also a dirty game out here. You know, um, in our room, man, we constantly are kicking people out because of like spamming and the spamming stuff works. You build a little brand, post some little charts saying you made some money. Somebody will believe you and probably want to sign up for something. It's so many scams out there. So many. So be careful. Be careful. Be careful. What was my next one? Where'd it go? Oh, let me move this over here so I can see these together. There we go. Okay, next stock. AMD LRCX. AMD. What you see? You see the same thing. You really do see the same thing. All right, we got some support here. This is I'll make this a little tighter. Actually, let me go to the month chart for a second so y'all can see it. All right, so check this out. Look at this. Look at this. Look at this. Right here. We got stuck for, oh man, geez, how long is that? Look how long we got stuck. Look at that. That's like a whole year. Price didn't go anywhere. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, it's almost a year. It took a year to break out of this range. Then we ran from 94 to 164. So it almost doubled, 94 to 90 to 180, 164. Almost got there. Really strong pullback, touching that bottom band, but right there back in that range where price has memory and these big, huge billionaire investors and funds have memory, right? Because they were, if they were smart, loading the boat here, getting ready for this explosion to happen. Bullish market. There was no reason to get out here. This was just a waiting period when these ranges happen. Now, there's ways you can kind of tell which side we're going to kind of break to, which is more probable. just from like looking at what I'm looking at right now, without even getting to like my deeper, my other studies that I had that I don't even show people. You could tell we was just about to explode up. It was just we just needed some time. Nothing in here signaled downtrend, bearish, reversal, nothing. It was still a strong bullish market. This is called a bull flag. What the heck is a bull flag? Pretty pattern. People love all these dang on patterns. This is like the pole. And then here's the flag. It's called a bull flag. All right. Usually, bull flags, we get another push. And then what do? We come right back down to sit back inside of that flag. So once again, AMD is not let me go back to the week. It's kind of like the other two I showed you. And a lot of tech stocks really are going to look the same. Like for real. Like a lot of these, all in, the NVIDIA's, AMD, which are competitors, Apple, a lot of these are going to look the same. So once again, we're in a downtrend. We're kind of right at support. Don't get super excited if we get a bounce just yet. We're not out to clear. We got some numbers coming. It's just, I don't know. I don't know how the rest of this year is going to go. I really don't. You'll never hear me trying to predict. Give me a chart. I'll tell you what I think is most probable to happen based on the math. There we go. That's how you should think. What the heck? Oh, I got somebody posting some crazy stuff on my. Oh, let me see. I think I know how to block these people. Aha! I know how to block you. Bam. So you messed up. Messed up. I know how to block people. Blocked. You done. I just started in January, so I need the explanation. Got you. Okay, cool. All right. Let's see. So yeah. So that was AMD. Unfortunately, and sometimes like if I could do this every single day, I'd be able to tell you guys when it's like great time to buy some puts or get out of your put, right? Take profit. And it just seems like usually for whatever reason, whenever I go live and do these, it's very few stocks that are like in a really like perfectly at the right price that I would want you to buy or sell them at. Right here, you don't really want to like buy right. You don't want to sell right now into this. The better time was actually a couple weeks back. Right. If I kept it really simple, we knew we were in a downtrend. You should have bought back here. We closed under this week. Even after this little positive week right here. This is what you buy. Why? Because we're in a downtrend. Right. So I had to make it like a line, like right there. That's the line. We break that. We're going back down. It was real simple stuff. All right. So there are times to buy. Right now, it's like you should have bought a couple weeks ago. Right? I mean, I'm sorry, you should have shorted a couple weeks ago. Just right. And I'm kind of now thinking a bit more as a trader, right? I went from investor to trader on y'all. And notice how as soon as I start talking, the trader noble started talking. I started talking about making money to the downside because you can make money when prices go down. So once again, these recessions that happen, they're not bad for everybody. It's just a reset. You can make money in both directions. It's just most people only know one direction. All right. LRCX. Let me hit the LRCX. And let me zoom out a little bit. Actually, I'm gonna go to the month first. Usually I start at the month, but whatever. I don't always start at the month. Month and week. I keep it simple. Month and week. All right. Get the bigger overall view. So we're at that bottom band. All right. Squeeze is not giving us that red bar, which kind of indicates that we're getting stronger volatility. Right. These moves, when we hit these highs and slowly come down, this is like the slow process of beating up all of the bulls in the market and getting them to kind of just like basically it's like neutering a dog. You taking all that energy out of them. All right. When prices do this, it takes that energy, the faith, the hope, right? And we move to different sectors and we start protecting our wealth and protecting our money. And it's like, oh, this stock ain't what I thought it was, right? That's what we start doing when this happens. But we're still like on a month chart right now. LRCX is still like, it's not even like really, we're not even like in panic mode yet. We're not. So once again, today was about worst case scenario. We don't want it to happen, but I just, I'd rather have you guys living in reality. All right. And we've already dropped 44% on this stock. 44%. With the market poised to go lower. Right. So yeah. Let me hop to the week real quick. Same thing. Right. Past couple weeks, little pop up, came right back down. We're not. No. Hopefully, one of these stocks I cover, I can say something different. Oh, you know what? Oh. I think I keep getting people. I keep getting these little spammers, but I'm gonna try to. I think I got another little tool I'm gonna use to get rid of y'all. Keep playing with me. Keep playing with me on my live. I like drama. I'm from the hood. I was born in Gary, Indiana. I'm okay with a little drama. It's life. I ain't gonna get frazzled because you posting some crazy stuff on my live. No, I'm gonna just block you. I'm gonna have fun blocking you. That's all I'm gonna do. I got a new game. Okay, Felicia said Felicia wanted me to look at FTNT and DTLR or DL. I always say it backwards. Dollar Tree. Okay. So peep this real quick. I want to show y'all. Dang, where is it at? I want to show y'all. Dollar Tree. Oh, that's what I wanted to do. I was like, what did I want to look at real quick? So this was a recession, but I want to see that drop. 55. Okay. So even that, doing that really quick. I know the last recession, recession '08 dropped 57%. This drop on Dollar Tree was about 56%. All right, recession, 56%. So that's pretty much equal, right? So without even looking at the stock, I can basically guess its beta. Once again, beta speed of fluctuation. It can price fluctuations, volatility compared to the S&P. S&P is the standard. S&P is 1. Right. So once again, why do I say all that? I just say that to say when you really get the math behind this stuff, some of this stuff you can literally figure out in your head if you just understand how it works. Like how this relates to this number. All right, you don't even have to look at all this stuff once you like really get it. So let's see. Dollar Tree looks a little different. I'm gonna go to the week chart. It looks fundamentally different than everything else. And if I go to, matter of fact, let me do it like this. I'm gonna go back to NASDAQ real quick. See this line right here? This line is when, for me, I would say, yeah, bearish. Right? On the week chart, don't get excited about buying. You're just going against the trend and you don't even know it. Right? For me, that happened in January. And November, December gave you 2 months to kind of prepare for it. Because when we start ranging, when we start ranging, we're going to either push higher out of that range or lower. We went lower. We came to the lower part of the range. All right. So that week was January 124. And I'm going to go back to, D. I always want to say D. I want to say it backwards. If I go on the week back to 124, peep this. I put that same line in the sand, right? Connecting Dollar Tree and NASDAQ. All right, so this same line, this week right here is when NASDAQ started to, for me, establish a downtrend. And this is when Dollar Tree actually started to get some push. We got more buyers. Why? Very logical, simple, rational case study. When things get a little scary And unemployment, is a little shaky, and these inflation numbers are getting higher, and oil is getting higher, and they canceling flights and all this stuff. Like beginning of the year, not starting off good. What do people do? They go to Dollar Tree, go to dollar stores. You get a little cheaper. Not even cheaper. It's just the stuff. The level you were buying. You was going to Target for everything. You ain't got to go to Target for that. You like, I'm gonna get it from Dollar Tree. you downgraded from Target to Walmart to Dollar Tree real quick on certain items. But when millions of people do it, guess what? Does well for those companies or for that company, right? So I don't know what happened here. I'm assuming it's earnings this week. The way I'm going to figure that out real quick is I'm going to go to the 4-hour chart and I want to see. Looks like so right here. Yeah, I don't know what day. What day was this? This was May 17th after hours. The gray is when the market technically is closed. The black is when the stock market is open. So big drop happened here, and then we just crashed all the way down to this 200 period. But that's the 200 period on the 4-hour for my slightly more advanced people, right? And then I don't know. So one of these had to be earnings, good or bad. I don't even know. But if you want to see earnings real quick, you notice a drop like that, you just gotta just know what to look for, right? So stock went right back up. If I go back to the week, looks like we are attempting now, right? So we had this very ugly bearish week, which recovered really fast, right? So we need more buyers. But right now, this is one of those, what's going to tell the story? Are people going to focus more on this negative that happened? Are we going to go back to that low? Or did we truly recover? I don't know. I didn't do like some hour or two, analysis on Dollar Tree. I'm just looking at the technical side. The fundamentals helps, right? It helps. But I can still at least know what questions to ask just from coming here first. We had a terrible week and a great week. We're only going to continue to go back to these highs, or we're going to come back to these lows at 125. Right. So I don't know enough about Dollar Tree to per se give a prediction, but I mean, right now, we're inside of this green bar. We're inside here. Yeah. Market gets worse. Probably going to run back up to these highs and hit 180. I said probably, which means don't quote me. um, TNT. Oh. Okay, so, and I probably should have asked. I don't even know if these stocks you guys were asking me about like long term investor potential, or where are we talking about like trades? Because I kind of, when I hit my charts, I almost flipped to trader without really like saying it consciously to you guys. So at least you know now. So had a really strong run during the COVID run. These last 1, 2, 3, 4, 5, 6 months have been pretty ugly. I could put a box around this candle here and literally draw some support there. I go to the week, you already know, because I already did the analysis just by looking at the month. Real choppy. Oh, this is choppy. This is tough. And if we look down here at the squeeze has these red dots. When we have those red dots on the squeeze, that's basically saying the Bollinger Bands are really, really tight. The average of the average is tight. Ooh, prices are tight. Nobody's budging. Bulls aren't really killing it. Bears aren't killing it. We just, we tight. All right. So it's like a pipe before it bursts. I can't tell you when it's going to explode into what side, but usually, right, we come out of those, where the squeezes are kind of off is kind of, how the indicators use, right? When the squeeze turns on, it means we get a jolt of volatility. We usually get a strong trend in either direction. Right now, it's really tight. We're not dropping any lower, which I guess is a good thing. I mean, it is a good thing. But every time we run up to 70, you can't really break 70. So it's like 70 and 54, right? Just kind of stuck in the range. Let's see. Oh. Man, Netflix fell from grace so badly. Good Lord. And I told people, I'm kind of mad at myself. I should have made a killing on Netflix because I saw it coming. I saw it coming. I be trying to like less is more is my whole little mantra. So like with options, I try to keep it to like 5 stocks and just focus on those good volume, easy, clean charts to read, versus like scanning and using all the, all them tools and all that. And I've done that before, but it's like part of this is just keeping it simple. It's like meal prep. If your meal prep is you got so many ingredients, it's so complex. When it's time to actually cook the food, you don't even feel like doing all of that. You got too much stuff going on. You need some rice, 2 proteins, and 2 veggies. That's it. And some seasoning. Use different seasonings to make it different meals. Keep it simple. It's the same thing with investing, or same thing with your charts. And how you. I would say I've consulted a lot of people who are just doing too much, tracking too many stocks, trading too many stocks, investing in too many stocks. Less is more. So, man, I'll just go to the week chart. Here's the thing. The thing about Netflix though is Netflix honestly is the worst case scenario that we don't want to happen for the broad market S&P NASDAQ. Why do I say that? I say that because this matter of fact, let me take all this off my chart real quick. If you go back to where COVID's low was right here. Right? The previous support, before that was 250. We're under 250. So you got to think about it. Netflix got the same 19-month run that everything else did. But because of some bad earnings and a couple of other fundamental things, even though at that same period, they finally established positive free cash flows, a lot of their content is designed to, it was really designed to help get them away from spending so much money, so much of their capital cash on licensing and all of that stuff. That's really like part of Netflix's strategy. They're not just creating all this content because they like creating content. They want to create their own content because they're tired of paying these studios for the studios content. All right. So, and that worked out, and that's a good fundamental thing to have more free cash flowing. But Netflix would be, I mean, just Google it, pull up some articles. That's all I can, to kind of keep it simple. There's a ton of good information out about Netflix, but once again, the bad case scenario is this the future of a lot of tech stocks and a lot of, really just the market. This is what, unfortunately, this is exactly what it will look like if we do go into a full-fledged recession. We're just going to go all the way back to those COVID lows and potentially lower. And that's going to be tough. I know. If it happens, I know. But I want y'all to remember, after the last recession, we had 12 years. We had 12 amazing years. So perspective, times, don't get trapped in right now. Don't. Investor, do not get trapped in looking at what's happening right now. It's not the way to look at it. Wealth is made long term. Okay, let me see. I got a few stocks in here too. Oh, McDonald's and Neo. MCD. Get rid of all this stuff. Okay. McDonald's, surprisingly, I'm going to go to the week. So, where's that January 24th? So that January 24th, where NASDAQ and pretty much everything started to go bearish. I mean, right, it was kind of the same thing, right? We had that really 7 bad weeks. But I'm a little surprised here that we have not tested these lows again yet. So I didn't get a chance today. I mean, with sometimes when I'm doing these lives and I ask guys in the room, folks in my in our insider trading room, like, what do you want to talk about? I can do a little bit of like the fundamental analysis, a little bit before. A lot of times it's just on the fly because I know my stuff. I'm confident in what I do and being able to give you some sound analysis from a technical side. But yeah, I don't know. This is interesting. I'm actually kind of like, why haven't they fallen? One thing to note, one little thing. is that the squeeze has all these little red dots. When we get all those little red dots, I know it's just a little red dot, but it's telling you something so important about the math behind like how prices are moving. It's telling you that this thing is really tight. It's not going to trend. It's just it doesn't trend when we got the red dots. It's like a red light, green light. Green light is go. Red light is telling volatility just stop, stop. We're not going to trend. We're just going to sit there for a minute. All right, so we got this little bounce here off of 220, pushed up to like 260. And we drop back down to 230. But right here, really from this low to this high, just ranging, not going anywhere, a little stuck. Market goes lower. You know, we go into official recession, which that itself psychologically, just saying we're in an official recession is going to make people have certain decisions are going to instantly be let me sell this, get out of that, move my money, wealth to like safer, but you know, like just that alone, right? So, you know, just trying to give you guys like a heads up, and I don't want to paint everything as a negative picture. I don't even think of per se markets going up or down as negative. It is what it is. I can't control this. None of us can. There's too many thousands of factors happening all at one time, right? So, you know, enjoy the journey as much as I can say enjoy it when everybody's losing money in their portfolios because the market is just down. There's nothing you could do in that sense other than, you know, hedge your bets, go the other way, you know. Uh there are a few other things you could do, but today isn't the day for me to like give you like 5 options for like other things you can do. So yeah, McDonald's is just kind of, you know, as a matter of fact, let me just check real quick. How much did it pull back though? 271 came all the way down. So about 20% drop. So yeah, so that's interesting. It's been a little able to kind of withstand this down a little bit better than everything else, which has just been new low, pop up, new low, or just that continual pattern, right? But it's right now stuck. Volatility is very tight, so don't get too, you know. And it will make a move at some point. But let me see. Okay. Try to take a look at H Ace. I can't even talk. Jeez. If you get a chance, defensive recession play. Okay, cool. HSY. Um. Oh damn. Okay. Let me hit Neo real quick. Neo. Let me get rid of all this stuff. Go to the month. Okay. So, unfortunately, this one is in from those 1, 2, 3, 4, 5 steps. This is one of those that just looking at the month chart in 2 seconds, I can tell you it's sick. It's not dying. I want to say death is on the way, but we've gone through 1, 2, 3, 4, 5. So it fundamentally is already, technically the picture already is in a recession. All right, and unfortunately, depending on how much you know about trade and investing, well, really how much you know about trading and making money on the short side is these red bars here. All right, with the squeeze, normally we get about 12 of those and then several yellow before we even remotely really try to recover, go back blue, which is bullish, right? So we only have 5 of these. So even just off that, I would say we at least have a potential 7 to 10 more down months. Doesn't mean we won't get 2 or 3 months that go up. But usually we don't get, it's very, 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 very rare to get 5 red bars like this. And then we pop back and we yellow for 1 bar and then we just back bullish. So yeah. Yeah. We at what, 22? The low was 119. I can't even lie. We going to it. Yeah. Anyway. Okay. So yeah, and having some trouble. All right, look at all these weeks under, lower, 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 lower. All right, so think about what I said. Like right in here, actually way back here. See how we got these red bars? We got about a good 10, and we had some yellow. We tried. And then we had this little fake bullish move. Even though it turned blue, we really didn't go anywhere. There's a way to look and kind of, once again, if I had to do the analysis and go back in time, and none of this really was, it wasn't a strong bullish market at all. So all we did was go lower. Right? And even right now, we got a couple red dots. So once again, tight, compressed, volatility, tight. Even if it looks like it's bullish right now, it's not. I'll say that again. Even if it looks like we're starting to really not. So be careful on you. Where we at? Turn some music on. PLTR. Oh, let me take everything off this chart too. Oh, you know what? I should have looked at the market cap. Normally, me and my cousin Joe, when we doing this live reviews, we try not to touch like stocks that have a market cap under $1 billion. I don't know what this one's is, but just because it's under $10, it's not a good sign. No, it's not a good sign. But I mean, I don't know. Maybe you know something about the company. Maybe you work for them. Maybe you have definitely, way more fundamental insight than I have, because I have very little right now on this stock. It's just certain stocks I'm gonna be real with you, I don't even pay attention to. But I mean, it's in a firm downtrend. We just hit a new low of 644. The week chart, it's just down. It's bearish. And even though all of these bars are yellow, we still have been making new lows, right? So we just don't have enough bulls to get excited. You need people to push. You need a catalyst. We don't even have a catalyst in the broad market for these stocks that are getting beat up really, really bad. Even though the market is not, once again, market overall is only at step 2 of the 5 steps I walked you guys through. This stock is already at 5. Right. So that's that's a long-term play. That's a long, you gotta be patient. If you believe in it, stick to your guns, be patient. I'm just giving you like what's happening right now. Where are we? And compared to, once again, that five sequential steps, right? A little reversal out of the uptrend, start to go into a downtrend just a little bit. 3, we try to get some recovery. Bulls try to buy, they fail, fade, we go lower, and then you get that strong drop when everybody's like, F it. There's no reason I should buy this thing. We're not, right? So I'm literally just doing kind of that on every stock to tell you where it is. You know what I mean? But this one's it took a beating, and it's not done because the market's not done. I don't think. Let's see. Oh, Roku and HSY. The last 2. Roku. So we'll go. This is Roku. I'll take everything off. Clear that out. So once again, month chart under this band, green dots, getting some red bars. It's already in a recession. It, like, by itself, if this was the market, it's in a recession. So once again, long term, if you believe in it and you have your conviction, buy, keep buying, right? Because if I run real quick, if I go back to the recession of 08, which was right here, and I'm literally gonna put a box over this entire period. If you bought every single month During that entire 19 months of down, you just kept buying because you were a long-term investor, right? Look where you'd be now. All of those buys would have done you very well a decade later. 15, 12, 14 years later, you'd be chilling. You'd be like, I was genius. That was the best thing you ever did. But it's time though. It's time. Time. You can't be an investor thinking like a trader. Because you ain't gonna make no money. It's not how it works. It's not how it works. It's not how it works. You gotta have this mentality, that Jordan mentality.
I'd do anything to win.
And part of doing anything to win means you have to be patient. Yep. Patience. It's an investor's superpower. Like, to be real, it really is. What stock was I just on? I'm saving HSY for last. But damn, what was the last one I just went to though? Was that Roku? Oh yeah, it was Roku. Okay. But yeah. But once again, so when I, as an investor, and I can't even write like, I wanted to give you worst case scenario. Where would a it's really bad bottom be? What are those 5 kind of technical steps? And I could have made it 10 steps. Like I can, I wanted to keep it kind of simple, 5, right? But when this process happens, right? When trends change from uptrend to reversal to downtrend to strong downtrend, same thing happens every time. All right. So this one's on a strong downtrend. That's what's the low? What's the lowest it's been? 26? Yeah, 90. Can we go lower? Yes. Will we probably go lower? Yes. Could we run up to test this bottom band at like 150? Yes. But we need we need some good things in the market to happen for that to happen to Roku. And to actually lift it where we start to reverse and then go back into an uptrend. It's just, so right now it's getting beat up pretty bad. Getting beat up pretty bad. But once again, like I said, though, you believe in it for the long term. I don't want, here's what I don't want. I don't want because it's at 89. If it dropped down to 50, I don't want because it's in a downtrend right now, you to lose faith in it. And 5 to 10 years from now, Roku is back to $500 when you could have bought it at 50. Or 89. You could have bought shares at 89. 90. Right? So what are we doing? 90 to 500 is a nice return. It's a nice return. Can it get there again? You have to today I wasn't teaching on fundamental things that you need to per se look for, right? But if you believe in it, that's the thing. That's what matters. And I should have said this earlier, but if so this is HSY. Hershey's one of the nine. Hershey's doing, look at Hershey. Recession was here. I mean, not recession. COVID was here. That was that really bad month. Took us a while, right? Took us a while to figure out, are we going to break the high of that candle or the low, right? Took us a while. We broke out of in April. Strong uptrend. Still in a strong uptrend position. One of the few stocks that you will see. Reminds me of maybe this was earnings. Reminds me, what was the stock I looked at earlier? Was that McDonald's? No, it wasn't McDonald's. Whatever that stock was I looked at earlier, that had that one bad week and another really good week. So, right. So now you have this week. This is the that technical traders are looking at. Pushing back. We're almost at this Bollinger Band. That's a good sign. We're almost back at the highs. And it is still bullish, but this could easily fade. So I would say watch this 200 area, because if we break that, then that means this week kind of firmly affected, so we'll probably go into a downtrend and be able to cruise right back down here with the rest of the market, which probably is going to come down to. Let's see. Yeah. Okay, let me do this real quick. Oh, Christopher John said, "Heard you doing good because everyone." Oh, you know what? I was for a second I was thinking about that, and then I when who was that posted it? Oh, when Charles posted it, I thought he was talking about like a I forgot that was their ticker symbol. I thought he was asking me to look at something that was more of a recession defensive play that was like almost like some of the inverse ETFs that go the other direction. There's some like there's some like creative stuff out there. There's like some counter inflation stuff. I mean, we can make anything, right? Like these financial products, we can literally make anything. Somebody's gonna make something. Like somebody's working somewhere right now to create some new thing to help protect you from recessions or inflation. Like this thing is so creative. I know we think like the music industry and dance and theater and movies and all that stuff. No, this financial market is creative as hell because we just literally make whatever the heck we now the math has to be there. But these products, they're stuff that can make you money up, down, sideways. We start talking about options. What? We're going to figure out ways to make money and to keep the wealthy wealthy. Right? That's how this works. So
winning is
oh, that was my guy. Tim Grover. I want y'all to be winners, but I gotta let him. This was Kobe and Michael Jordan's personal trainer. I'm gonna let him tell you about winning. Because winning's super important. I want you guys to win, but here's the truth about winning.
Winning is not about the trophy and the accolades. It's about the grind. It's about the obstacles. It's about the challenges. It's about the pain that you endure along the way for that 30 seconds of being able to either stand on the platform, be acknowledged by individuals that are close to you. But when that happens, your mind has to immediately shift back because now you felt and tasted something that you could only get through winning. Are you willing to do it again?
Ooh, I love that quote. You found something that you can only. So what he's saying is like, y'all, like the pain, the studying, the emotional, the like all of it that it takes to really, really seriously try to do this wealth thing. And I don't even want to say it like it's just this thing, but to get on that path, like we don't live in a society where we're trained and taught and we give middle school and high school and in college, we keep reinforcing these principles that just work. You have to discover them, mentors, classes, reading, right? It's not given to you. Nobody cares if you're wealthy or not. You got to get it. And as a trader, the process, the glory of standing on that win for the day, the week, the month, to see that in your account, it's amazing. It feels wonderful. It does. But then you got to do it again. Got to take another trade. Got to do it again. Got to go through the same process again. And every time you put that risk on the table, every time you hit the button to get in anything, there's risk. That risk is part of the process. Get rid of like erasing the risk. I used to always say, there's no such thing as risk. There's only education and ignorance. As long as you know the consequences, you've done as much research as you can on the stock. You have, once again, all I did today was try to lower your emotionality around like how bad this can be. I wanted to give you the worst case scenario. It's a 50% drop going all the way back to the pre-COVID lows. That's the worst that can probably happen. And even I know I just said probably, right? So I'm not God. I can't tell you but based on last 25, 30 years, stuff repeats. It really does. It repeats. Let's y'all hear from Kobe real quick.
It's in the moment. So you have to live it. And when you practice those things, you become better at it.
I always ask people in my sessions, like, what are you practicing? Right now, as a trader or investor, what are you practicing? If you're like, I'm not really practicing anything, then you're not growing. This is a sport to some level, a metaphor. If you're not practicing anything, I used to run track. I mean, I played everything. Let's go to, I want to go to baseball. What sport I want to go to? I'm gonna go to track. I'm gonna go to track. We had this little technique for hurdles. My coach taught me. I'll never forget. Right, it helped me to get the pattern with the jump, drop. You almost like with hurdles, you're gliding over them. You're not jumping. I used to jump at first, right? You see bad hurdlers, they're jumping. You're supposed to run in a way where it's almost like 1, 2, 3, and the kick. So I would like get a foot, like maybe like 2 feet away from the wall. He'd have me by the wall, and then I would practice. I would kick and get my leg as high as possible, right? To build that muscle memory. I had to practice that. So when I was running at full speed, I didn't jump. I literally just kicked, and I'm over the hurdle without, and people like, dang, this boy is good at the hurdles. I had to practice. What are you practicing? Better entries, better exits, how to capture more, there's a million things to practice. What are you practicing? It might even be, I'm gonna let y'all in on a little secret real quick. Before I do these lives, I put on cologne. Because my cologne smells really, really good to me. And I just feel better doing it. So when I do these, I get myself like psychologically ready. Like I feel good before I'm even live. What do you do before you trade? You have a process? You got a mantra you say? Do you have a routine? Something that gets you in a space where you can execute. All right. So we could talk about practice from a couple different standpoints. Hopefully this was helpful. Hopefully it was. I got some new stuff coming, and I'm getting it ready. I want to have a lot of fun. If you're looking for a solid education, I got some new stuff coming this fall. I'm kind of working on it right now, trying to figure out the best way, but I really want to teach your high school kids about options. I want to teach you about options. I want to teach more people about futures who are ready. I want to do something a little more intensive. I got I'm growing my team, which virtually has been me for a long time, but I'm fully getting the necessity, impact, and how critical it is for me as a business owner, somebody with a vision for his life, to add the right people to my team. So I want to get better all the time. I want to help you guys be able to make more and do more, And so thanks for watching. As I always say, share this video with somebody that you know, that you love, that needs to think critically, see the chart, see what we went through today, and think about really, really taking this market serious, because it's amazing. It's one of the most amazing things we've ever invented. I love it. I love teaching it and sharing it with you guys. So thanks for watching, man. As always, I'm gonna go to my last few comments. Christopher John said, where do you find a mentor? Good question. I'm actually thinking about a mentor, a very small, like kind of 5 to 10, like for real mentorship thing. I'm not there yet, but hit me up. I've seen your name several times. It's relationship building. Charles says, salute, bro. We appreciate you. That Limitless t-shirt would be dope in that Texas heat. It would. I got to get the store up. I got like 6, 7 t-shirt designs. I was supposed to drop early this year. I got behind dropping them this fall. Don't worry. You'll definitely be able to get it. Would love to do better on my options, but love to do better options, but my goal is to do futures. Yeah, you can do both. Learn them both. I had a class February-ish, 8-week. It went a little bit longer. Yeah. I kind of reserved the freedom to take them longer. It's like we need to do more. If we need more time, we need more time. But I had a 8-week options and futures class. So probably be, refining those, which I am right now. I don't know. I was trying to get better. I had some little snafus just because of not not really snafus, but I had some physical stuff that happened. A couple classes, my back. I got like a thing going on my back. I couldn't even sit up to do the classes, so they got stretched out for medical reasons. So anyway, check me out on Facebook at Noble Woods. Go to my YouTube page, subscribe at Being Noble. It's just Being Noble on Instagram. And that's it. Thanks for checking me out, man. Talk to y'all later. Peace.